Assalamu alaikum friends, welcome to my channel. So today's standard is IAS 27, again a very short standard. IAS 27 deals with separate financial statements. Okay, we most of the time we don't use this standard in group accounting because group accounting is consolidation, so we use IFRS 3. But we need to use IAS 27 sometimes, especially when they make separate financial statements and what adjustments need to be done in the separate financial statements. Because the calculations or the measurements what we do in separate financial statements and consolidated financial statements are different, they are not same. That's why we have two different standards dealing. We have IFRS 3 which deals with consolidation, and IAS 27 separate financial statements, separately for the parent and separate for the subsidiary or associate or joint venture. Okay, so IAS 27 applies when an entity has interest in subsidiaries, joint ventures, or associates and either elects to or is required to prepare separate non-consolidated financial statements. They are not consolidated. They are separately just for the subsidiary or joint venture or associate. Okay. They either elect to do that or they are required to do that. Okay. IAS 27 also, an entity need to have a subsidiary or a joint venture or an associate to apply this standard. IAS 27. Okay. In separate so basically you just have to remember IAS 27 is separate financial statements. Okay. In separate financial statements, investments in this is the main thing. In separate financial statements, investments in subsidiaries, joint ventures, or associates can be accounted for using three methods. This is what you have to know. How in separate financial statements, whether it's a subsidiary, whether it's joint venture, associate. Okay, let me highlight that also. These are the three things that can be accounted for. Three methods, either at cost, either in accordance with IFRS 9, or by using equity method. Let me explain this. If it is an associate, we use, or a joint venture, we use equity method. Okay. If it's, again I'm repeating, if it's an associate or a joint venture, because under IAS 28 we use equity method. If it is a subsidiary, we use at cost. And if it is an interest which is less than 20%, let's say you have acquired an entity but less than 20%, so it's neither a subsidiary, it neither classifies as a joint venture, also neither is an associate, then it is known as financial instruments. Okay, that is dealt using IFRS 9 if it's less than 20%. 20 to 49% it is an associate, more than 50% subsidiary. Okay, joint venture definitely more than one party is there, so you will understand. And if it's less than 20%, then it's dealt using IFRS 9. Okay, that's why out of these three methods you can use in separate financial statements. So in separate financial statements, dividends received from an investment are recognized in profit and loss. What is it? When you receive dividends, okay, this dividends can be received from anyone. Okay, from subsidiary, joint venture, and associate. That dividend is recognized in profit and loss account in separate financial statements. I'm not talking about consolidated, separate financial statements. Unless the equity method is used. If they have used equity method, then what do you do? Then where do you recognize it? It is given in the next line only. If the equity method has been used, then dividends received reduce the carrying amount of the investment. This is for equity method. Remember, dividends received reduce the carrying amount of the investment. That means whatever is your carrying amount of an associate or a joint venture or a subsidiary, whatever it is, it reduces the dividend. Whatever you receive, you have to deduct that. Okay, this is mainly for your associate and a joint venture, because for joint venture and associate only you use equity method, not for subsidiary. Okay, so whatever dividend you receive from associate or a joint venture, you deduct it from the carrying amount of that associate or joint venture if you're using equity method. But if it's not so, then you recognize the dividend received in the profit and loss account in the separate financial statements. Okay, so only this part, whatever I've highlighted, only you need to remember for IAS 27, not so much. I don't worry, IAS 27 is not tested so much detail, it's not tested it. Okay, so that's it for IAS 27. And now let me take you through this. This is the examinable documents. So I have highlighted whatever the standards I've completed. So let us see our progress, how our progress are going, right? So I've completed IS 1, 2, 7, 8, 10, 12. Whatever is highlighted, I've completed. Whatever is not highlighted needs to be completed. Okay. So now I have completed IS 27. Okay, I can highlight this as well. Then we have completed IFRS 12. So all those things. So I have completed this. We have completed IFRS 12 as well. Two standards I have covered today. So these are some other statements, guys, which we need to go through all this as well. Okay, conceptual framework, IR framework, management commentary, some general presentation disclosure relating to your EDs, material, all these things will be going out after I complete all the standards. Okay, so we are not, it's not so bad, right? We have almost covered. I think 40% is covered. The rest all I'll be covering. And don't worry, before your exam, I will cover the syllabus because I've been getting these messages that, ma'am, you didn't upload the standard. Ma'am, you didn't upload that standard. Trust me, I will upload it before your exam. Okay, that much you can trust on me. So till then, take care and see you in the next video.